Hello there, this is FairBinaryOptions.com and this is the US dollar Japanese yen daily chart. Now obviously we are not going to make any analysis based on the daily chart, but what I would like to show you here is what to expect on the medium term when you are looking at a contracting triangle. And because this is happening right here in front of our eyes with the US dollar Japanese yen, I want to make an example for all the future contracting triangles that you might meet. Sorry. A contracting triangle normally acts as a continuation pattern, as most of the time it is being viewed as it appears as a B wave or the fourth wave type, and implies either a C wave to the upside, of course, if the trend is bullish, or a fifth wave to the upside, again, if the trend is bullish. However, sometimes contracting triangles act as reversal pattern. If you zoom out a bit out of this pattern here, take a look here. So the US dollar Japanese yen, it is coming from the 75 level. It is going all the way parabolic to the upside and then makes a contracting triangle. See, this is our contracting triangle. Now this contracting triangle, funny enough, seems to break to the downside, so it is acting as a reversal pattern. What does a reversal pattern mean? It means that price is going to the upside here in an uptrend, consolidates in a contracting triangle, and then broken to the downside. Now how to treat this one when you are trading binary options, because this is the daily chart? Well, it's fairly simple. A contracting triangle travels between A and C and B and D trend lines, and if this contracting triangle it is broken to the downside, then we should label this triangle like this, like we've said. So A, let's put the A wave there, let's make it out of a different color, so let's say wave A. Then the B wave here, and then the C wave to the upside, A, B, C, D, E, so A, B, C, D, E, and this should be labeled. This is how the contracting triangle should be labeled. Now, like mentioned earlier, any contracting triangle travels between the A and C and B and D trend lines. So our contracting triangle here looks like this. So A, B, C, D, E to the upside. So E breaking to the upside. And now it is testing the all-important trend line, as you can see there. Let me try to make it like this, and then we will change a bit the color. So something like this. And this is our contracting triangle. So it is being actually right now at a major support, as you can see. You might even put the trend line to the upside there, but I don't think that this is the case. It is most likely a break here for the E wave to the upside, but the E wave, it doesn't necessarily go above the C wave here, so the contracting triangle is valid. And now we are looking for the break. As you can see here, the US dollar Japanese yen, it is making 97.40. Let me try to make this one a bit smaller so that we can actually interpret it on the lower time frames. And here, this one goes from here, from this contracting triangle. So our trend line looks like this. Now this is a daily chart, so obviously we are not going to trade any binary options based on this daily chart. What we are going to do is to go on the lower time frames by the time we establish that the triangle is breaking to the downside. So we are carefully watching here the downside, and we decide to go on the lower time frame. Let's go on the 4-hour chart. And on the 4-hour chart here, this is something that we can trade already. So the trend line is being broken. You may also decide to go on the 1-hour chart. It is the same pattern, the same thing. The trend line is being broken. Usually such a trend line of such an importance, when it is broken, it should be followed by a retest. It is not mandatory for price to come to retest the trend line, but it should be followed by a retest. So while we are not going to engage into buying puts because we want to buy puts out of this outcome, we would like to buy puts on a retest of this trend line, and because at that moment of time price will most likely be rejected out of it. This pattern is a reversal pattern. Normally price comes and reverses to the same level, and by the time it will come there, we will just engage into buying puts. So normally after, let's just write here, so after the contracting or the trend line, after the trend line breaks, look for retesting, for buying puts in our case here, because this is a reversal pattern to the downside. Now this is what I wanted to show you for today. If you zoom out, you will see from where we started. Let's go on the 4-hour chart, see, and price, it is now looking on this trend line to break it. Now normally this should go or might go something like this, okay? Nevertheless, we will look for a retest. Such a retest will most likely come, and then price to actually trend to the downside. This is how you should treat a contracting triangle, not any contracting triangle, but a reversal pattern contracting triangle. And with that, I would end my presentation here. Thank you very much for being here. Keep in mind, this is fairbinaryoptions.com, and our general sponsor here, Lion Eye.